And now it's time for Talking Trade with Sandi Siegel and Ken Wasley, sponsored by the Dairy Farmers of Wisconsin, Carroll University, and Michael Best Strategies.
Welcome to Talking Trade. I'm Sandi Siegel, CEO of ME Day, a customs broker and freight forwarder. Today, we're going to talk a little bit and give you a preview of the upcoming Wisconsin World Trade Day, which is coming up on May 19th. And that event is organized by MITA, the Madison International Trade Association, in cooperation with the Wisconsin District Export Council and the Wisconsin International Credit Executives. So I'm excited to have Trade Day back. We kind of lost some momentum since COVID, as many events, were less popular. And today we've got the keynote speaker, which is Jason Turner. Jason is the Chief Investment Strategist for Great Lakes Advisors at Wintrust Wealth Management. So, Jason, thank you for joining us. Thank you for speaking at Trade Day, and really excited to get your perspective on some things.
Well, thanks for having me on today, Sandi. Really looking forward to being a part of Wisconsin Trade Day. I've had that date circled in my calendar for a few months now, so hopefully get to meet some of the folks out there listening there too.
Yeah, it's terrific. And it's certainly very timely. Trade is very popular conversation topic these days on everybody's mind. This year already, first quarter has been very active. Certainly I felt it, and I think all of us have wherever you are in the world of trade. So we've got the IEEPA tariffs that were struck down by the Supreme Court earlier this year, and ruling that they were illegal, followed by the order to refund the duties, which opened up today, this week, and a lot of country negotiations, trade negotiations, and new investigations with different countries, that perhaps will lead to more tariffs. And yet, with all of this going on, and in spite of this, the U.S. stock market keeps going up. And I'm really hoping you can talk a little bit about that and, how the global trade market in particular is holding up with all the chaos.
Sure, we can definitely dig into that in a little bit of detail. From a 50,000 foot perspective, it seems like the spring, April timeframe is our time to talk about trade the last couple of years. It was tariffs last year. It's the conflict with Iran this year, and we've got this uncertain environment that's persisted the entire time. So if I had to underscore one word that kind of describes the state of affairs for trade globally, it's uncertainty.
Yeah, I agree. And, we talk a lot with our import customers, our exporters. What strategies, what insight can you give us, comfort can you give us in this world of in uncertainty, and how, exporters and shippers can cope with that or plan for that?
Well, for those that are feeling, some unease, some anxiety, driven by the uncertainty that we're experiencing, number one, you're not alone. Small business uncertainty is double what it averages currently. If you look at business confidence or business confidence around the economy, that is some 2 to 4 times less confident than we see on average. So you're not alone. Everybody's kind of dealing with the same environment. What that opens up, though, is potential opportunity and conflict. So as you look at the conflict in the Middle East, you see the immediate ramifications are primarily around commodities that are transiting the Strait of Hormuz. But trade outside of those areas is starting to adapt. So those minerals, those goods that are coming from the Gulf, that are being shipped from the Gulf, they are produced other places. And you've got countries in Europe, countries in the Far East that have been large trading partners of some of those Middle Eastern nations that are finding difficulty getting shipping through a narrow shipping corridor, looking to other places, looking to the United States, looking to Australia, looking to other areas in South America, for example, that may produce some of those commodities. On a finished goods basis, The immediate conflict, while disrupting to shipping in general, not disrupting necessarily to the transit of finished goods unless they are goods being exported to those nations. So going the opposite way through the strait than most of the exports that are coming out.
So it sounds a little bit, when we had our disruption and the quickly imposed, the higher rates of duty with China, and people started shifting supply chains, and but sadly, then that changed with little warning with reciprocal tariffs and IEEPA. So is it just remain flexible in your supply chains as some of these opportunities present themselves?
Yeah, I definitely think flexibility is key in the current environment. I also say contingency planning or scenario analysis. So look at a scenario. Think, all right, I rely on XYZ input, or I rely on XYZ market as an exporter. What happens if tariffs were to go up and have a 25% tariff slapped on anything going between us here? Where can I pivot? Where can I obtain inputs from, or where can I export to? What are the other markets that I'm developing? Kind of a great time to be thinking about developing new markets as an exporter.
Okay.
If you're in the export market and you're seeing some disruption globally, there are folks that are well entrenched that are going to take a lot of pain from uh, conflict and exports being locked up. There's those that are also going to take advantage and become the new supplier for something. Those doors are starting to open up. The longer the current conflict persists, the higher the degree of uncertainty around tariffs, the more those other nations are going to look for new markets and new providers. And that opens up the door to opportunity. And you only are able to grab that opportunity if you've convinced yourself not to be paralyzed because of uncertainty.
Right, right. And can you shed some light at all on how or why the stock market has remained, pretty strong in spite of all of this chaos this last quarter, this last year?
Yeah, absolutely. We see a fairly predictable pattern from the stock market when there is geopolitical conflict. So geopolitical conflict are those bolt from the blue events. No one really forecasted a Russian invasion of Ukraine several years ago. While you look at prediction markets, and maybe somebody was forecasting things going on in the Middle East like they happened, the reality is for most of the market wasn't anticipating this. They didn't price any of this in. You get that immediate reaction of a few days, really, where the market adjusts to the new normal, adjusts to the conflict, has a bit of a fear-based response. And we saw that this time. And then you see a period measured in a few weeks where the market recovers from that initial fear-based downturn. And we've kind of been through that now. We had a bit of a ceasefire rally, if you will, in early April. And now we've moved into earnings season. And this is the real encouraging mark for the stock market. It tends to analyze or take into account or price in these geopolitical disruptions in a short period of time and then gets back to what it was focusing on before. And what the market's been focused on for several months has been the robustness of corporate earnings. Corporate earnings, particularly for large U.S. Multinational corporations, frankly, actually global corporations too, across Europe and the Far East, they've had great revenue. They've had great growth in income. And the stock market continues to focus on that and keep its eye on the long term. And that's how we know that we're kind of weathering the storm. And what might be a surprising result to some folks to say, hey, there's a lot of conflict in the world, but the stock market went up. It is a bit of a predictable pattern.
Sure. All right. So here's what I don't hear anybody really talking about. And again, very timely. Customs has been ordered to issue refunds on $166 billion of duty. And and we're helping represent many customers and filing for their refunds. Now, understanding how the supply chains work, I have some customers who individually paid millions of dollars in the IUPA duties. So they're going to get all that money back. And while they may have, as manufacturers priced, added to their margin to cover for the duties, they're not necessarily able to reimburse all the consumers, right, for some of those duties paid. So where, how is that going to impact? In my mind, that's going right to the bottom line of some of these organizations. What is that going to do to pricing, inflation, the stock market for that matter? How's that going to disrupt the ecosystem?
I'm glad you brought that up. That's a
Yeah,
great question, great observation, and something probably flying below the radar for
right.
most people. That you've got several $billions that are going to be injected back into the economy that have been removed effectively as a tax.
Yeah.
When we look at that calculation of gross domestic product, we're seeing taxes as a subtraction, right? You're taking money out of the productive process, and now you're putting it back in. Putting it back in, and you're right, it's very difficult for the folks who paid the tariffs to pass that back on to their customers.
Right.
Now you can pass it back on in terms of pulling down prices back to where they were at pre-tariff levels. That's a consideration.
Sure.
The flip side is you probably incurred more expenses over that period too. So there's some real costs the business has to offset. They have to take that into account. And while the nice thing to do, quote unquote, would be to give the money back to the customers, I don't know that that's realistic. And an economist would answer this, and as I'm kind of about to answer it now, there is a trickle down effect of reinvesting in the business too.
Okay.
That if you can continue to deliver prices where they are today and fixed prices instead of crawling prices higher in 2026. Let's say you already got in fact, you front ran any price increase you were going to do in 26 in 25. That sets the bar at a level that maybe consumers have already adapted to. And if they've already adapted to it, now that money that went to the importer is going to get down to their bottom line.
Yeah.
And it's going to trickle down in the economy because now their employees are being paid more or their owners are receiving a bigger dividend. Right. Now they've got more capital. They're going to go out and spend that capital in their local economy, and that tends to generate economic growth. So these rebate payments, tariff rebate payments, they're in effect a bit of an economic stimulus through the system, whether that's manifested as giving it straight back to the customer and letting the customer decide what to do with it, or giving it to the business owner and employees and letting that trickle down through the economy in terms of either additional expenditures or purchases or expansion of corporate activity.
Sure. Okay. Fascinating. Jason, thank you so much for joining us today. I look forward to seeing you at Trade Day. Again, for our listeners, that's coming up on May 19th, and you can register through the MITA, Madison International Trade Association website. Thank you, Jason, for joining us on Talking Trade.
Thank you for having me today, Sandy.
You've been listening to Talking Trade with Sandi Siegel and Ken Waslick, sponsored by the Dairy Farmers of Wisconsin, Carroll University, and Michael Best Strategist.